Welcome to Market View with Ike Iosa and friends. This show that not only reveals and analyzes the inside story on today's market news, but also uncovers the areas where investors can make money right now. Market Views with...
Good morning. Mike Iosa is your host for Market Guest. My very good friend is Mark Young. Hi, Mark. How are you?
Real good, Ike.
Mark, since the last time we spoke, it seems like the world is going to end. So I'm really curious to hear what the sentiment is. And you have for us today two great charts. We are going to start with SH.
Yeah. The SH is the inverse ETF on the S&P 500 issued by ProFunds. And just some little background. I know a lot of your listeners are very familiar with it. But just in case, some of them aren't, just want to go over the basics on this. It's widely traded, maybe not by the most sophisticated folks, but it's a widely traded tool. Like a lot of ETFs, the sponsors do not want to see their ETFs trading at a big premium or discount to the underlying value. And of course, there's an arbitrage there anyway if they do. So if there's a tremendous amount of demand for the SH, i.e., shorting the S&P 500. That might go to a premium, and they will issue new shares and sell them to keep the net asset value, close to the market, or as close to identical to the market as possible. So what I do is I track how many shares are being either issued or bought in, because the same thing works in the opposite direction. If people are covering their shorts and they're selling that to a discount, the fund will bring in those excess shares and bring the value back to, we'll call it par, back to the market level. As a result, we can see shifts in speculative sentiment in there. And when I see a lot of accumulated new shorting, I'm looking for a low. Now, if you look at this chart, I'm measuring it on a daily basis, on a 7-day basis, and on a 21-day basis. As you can see, the 21-day is still way up there. We came off a little bit the other day. Yesterday and the day before, the day before and the day before that. But then yesterday we saw another 52 million in new shorting, net new shorting, which implies to me that a bunch of folks think they're going to be real smart here and get short for the inevitable test of the lows. That's a reasonable expectation. V bottoms are very rare in the stock market, especially in modern times. You usually get a pullback, a test of some sort. Maybe we get secondary lows coming. But it sure seems to me that a lot of people are getting short here. And this crew is not normally, when they have moves like this, it's not normal that they get right en masse. I realize people may be needing to short in order to hedge their holdings or whatever. But the correlation has been pretty good over the years. When you get high levels of shorting in the SH, unrelenting shorting, in fact, because they've been just shorting all, as the market's been rallying here, they've still been staying short. So they haven't come off much at all. And in that context, we probably have some higher prices to come. Now, that doesn't preclude a pullback. In fact, we had a pretty good one on Friday. That close wasn't exactly pretty. But the current environment, it's not wise to read too much into a single close. I would like, my target was hitting Globex, my first minimum target was hitting Globex, actually the runoff on Thursday. So, theoretically, this could be done. This rally, could be over with. I got into it and I got most of it just ahead of the lows. So I'm happy to claim with that. But when I see things like the SH and then also the relative VIX, which is a measure of the VIX versus itself, just to contextualize the levels. And that has also been a gold standard bottom spotter. And it is just off super record levels. It's extremely high still, but it's hit a massive record, way above anything that we'd seen in past years. And I've got data on that going all the way back to the 90s, the early 90s, I think 1990 in fact. It was never even close. And that reading was like 4.75, give or take a little bit. That's a huge deviation from the 200-day moving average. What I'm getting at here is we've had this dramatic rally. I believe it was 20% off the lows to the peak, and that's on the cash. On the futures, it's a little more. That's a big move in 3 days.
Oh, yeah.
But even on that, nobody's covered their shorts really. And the VIX is still quite high, and so is the shorting on the SH. And and I'm not seeing any optimism really anywhere else that makes me excited. So in this context, I can accept that there are very good reasons to expect the market to pull back down. But and in fact, because of the way they held the VIX on Friday, that's oftentimes a tell for some weakness. So we could be in for some more weakness in here, but my gut's telling me that this rally is not oversubscribed at all. And in fact, there's enough shorting that the system might be a little bit clogged with short. It's rare the market accommodates Johnny-come-lately bears who are going to try and get well after taking a hit for 35% or whatever it was that they got hit for in the decline. So I'm urging, I guess, an open mind towards this market because it can easily go either way. Now, one thing I will say, and one thing that will help us guide our course as we go forward, if we're in a bear market, and technically we are in a bear market condition, and we would expect the market to behave in certain ways. One of those things is in a bear market, you buy your sells and sell your buys. And, your buy signals don't work out, and your sell signals don't work out. And on Thursday night, we got a breadth buy. It's almost 100% confirmed. We got a trend buy. We got an MACD buy. And an MACD buy in general is a good fade, and that probably explains Friday's action. But we stacked all these intermediate term buy signals up, and if this is a bear market, you would expect this market to get clocked, and for more than a couple percent. In this market, I think we hit to consider moves of 3, 4, 5% as noise, unfortunately. But I would expect if we are still in a bear market condition, I would expect this market to take a hit for at least 10% and maybe go all the way back down and see the lows.
You make a very good point, Mark, and we have talked about this before because in bull markets, for example, as soon as you get a confirmed sell signal, the market turns on the upside. It's the exactly opposite in a bear market. As soon as you get a confirmed buy signal, the market turns back down on you. So how the market behaves is a signal in itself.
Yeah, I thought so. I think it'll be helpful to us going forward. We don't have to be so darn smart, right? The market does tell us all kinds of information as we go. I'm absolutely ambivalent about it. I could easily make this case going both ways, but I think if we don't see selling accelerate on Monday or Tuesday, I might be thinking that we've got this corrective rally has more to go on the upside. At some point in time, though, we'll probably want to get back bearish again because of they always like to bring it back at least part of that rally to test the will of the bulls. And in almost every bear market we've seen, they've done that, and that's assuming it's over. If it's not over and we have new lows coming, well, that's a pretty good drop from here as well. All we can say is let's be flexible as possible. There's good reason to expect some higher prices, and I do tentatively with considerable trepidation.
Mark, anything else you'd like to add?
Traders-talk.com is active as the dickens right now. A lot of good thinking, a lot of good analysis out there. I recommend folks swing by and check out what's going on. I will from time to time be posting charts that other people aren't looking at to get kind of an angle on things. I'll also be tracking the SH, and I'll be posting that chart as I get more updates, particularly if we see something dramatic like a bunch of short selling or a big increase in shorting. I'll post that publicly just to help folks along, give them a little edge, hopefully, in their trading.
Mark, thank you. Have a great day.
You too, and there too.